Nokia stock just dropped more than 6% in a single day. Is this a golden buying opportunity, or is this just the beginning of a bigger correction? Analysts still see more than 40% upside, but the chart is flashing warning signs. So, what's really happening with Nokia stock? Let's find out. Welcome back. Today we're analyzing Nokia NYSE NOK. We'll cover why the stock crashed, the latest fundamentals, technical analysis, and whether this dip is worth buying. Let's dive in. Why did Nokia fall? Despite reporting solid financial results, Nokia shares sold off sharply. The biggest reason is forward guidance. Management warned that higher memory component costs and supply chain pressures could reduce future profit margins. Remember, the market doesn't just react to today's earnings, it reacts to tomorrow's expectations. Another reason behind the sell-off is profit-taking. Nokia surged from around $5 to over $17 earlier this year. After such a massive rally, many investors decided to lock in their gains. That selling pressure pushed the stock sharply lower. Now let's look at the fundamentals. Revenue stands at approximately $22.45 billion. Net income is around $710 million. The company also continues paying a dividend. Nokia remains a global leader in 5G infrastructure, optical networking, AI-powered telecom networks, enterprise networking. Long-term, AI and data center expansion could become powerful growth drivers. However, not everything is perfect. The trailing PE ratio is around 67, which is relatively expensive. Investors are expecting strong earnings growth. If that growth slows, the stock could remain under pressure. From a technical perspective, the trend is still bearish. The stock continues making lower highs and lower lows. The next important support sits around $8 to $8.50. If buyers defend this area, Nokia may begin forming a base. But if support breaks, more downside could follow. For the bulls, the first major resistance lies between $10.50 and $11.50. A strong move above that zone would be the first sign that buyers are returning. Until then, caution is still warranted. So, should you buy Nokia now? If you're a long-term investor, buying gradually through dollar-cost averaging may be a smart strategy. Avoid investing everything at once. If you're a short-term trader, waiting for a confirmed trend reversal may be the safer choice. Remember, cheap stocks can always become cheaper. Analysts remain optimistic. The average 12-month price target is $12.86, representing roughly 41% upside from current levels. Some analysts even project prices above $20 still. Price targets are estimates, not guarantees. Future earnings will determine whether Nokia can reach those levels. Here's the bottom line. Nokia's long-term business remains solid, but near-term risks, supply chain concerns, and weak technical momentum continue to weigh on the stock. For long-term investors, this may be a gradual buying opportunity. For short-term traders, waiting for confirmation could reduce risk. Now it's your turn. Would you buy Nokia at these prices, or do you think the stock will fall even further? Share your opinion in the comments below. If you found this analysis helpful, don't forget to like, subscribe, and turn on the notification bell for more stock market updates. Thanks for watching, and I'll see you in the next video.